all about these new U.S. tariffs and what they might mean for India. It's a lot to digest, so let's just dive right in.
Sounds good.
All right, so you're really looking to kind of cut through the headlines, right? Get to the real nitty-gritty of how these new tariffs from Trump, these reciprocal tariffs, are going to actually impact India. We're talking about the ins and outs of its economy, its trade relationship with the U.S., and, at the end of the day, who are the winners and losers in all this?
Absolutely. And, I think the sources you sent are really interesting. We've got news reports, economic analyses, all painting this picture of, a trade landscape that's shifted pretty significantly. As of April 2025, these tariffs are in effect. This all comes after, Trump's announcement earlier this year, where he was talking about India, along with a few other countries, engaging in what he called unfair tariff practices.
Right, exactly. Unfair, in quotes.
Yeah.
So let's break down the specifics of what's actually changed.
Yeah.
What are we really looking at here?
Well, there are two main steps. First, starting April 5th in 2025, they pushed this broad 10% tariff on pretty much everything coming into the U.S. Didn't matter where it came from. Then, just a few days later, on the 9th, they roll out these higher reciprocal tariffs. These were aimed specifically at countries with a bigger trade surplus with the U.S.
Okay, so that initial 10%, that's like a blanket move.
Yeah.
But it's these reciprocal tariffs that seem to be the real, turning point.
Definitely, yeah.
And for India, we're looking at a pretty hefty 26%.
Right.
And, it's interesting. One of the sources is saying this is basically just India getting a taste of their own medicine, right? They're framing it as the U.S. simply matching the tariff rate that India slaps on U.S. imports. But then you look at some of the other data, and it shows that India's average applied tariff across the board was only about 17% in 2023. And that's actually higher than what many other major economies have in place.
Right, yeah.
So it feels like there are a lot of different ways to spin this, you know what I mean?
Yeah.
Different interpretations of India's current tariff structure.
Oh, absolutely. And I think that's kind of the interesting point here. You see this difference in how the U.S. and India are kind of setting up the narrative. The U.S. is really leaning on this reciprocity angle, right? Like, hey, we're just giving you back what you give us. And they're looking at these very specific one-to-one comparisons. But India can turn around and say, hey, our overall average tariff rate is higher, so our trade system isn't as open as some of our partners. And that's not just like some semantic argument. It actually shapes how each country justifies its actions and how they might negotiate moving forward.
Right. Very interesting. So with all that said, with these new tariffs now live, how did people react? What were those initial assessments of how vulnerable India might be?
Well, some mixed reactions, actually. A report from Nomura suggested that India might actually be one of the least vulnerable economies in Asia to these tariffs. Their analysis really focused on the fact that Indian exports to the U.S. make up a pretty small part of their overall GDP, just about 2.2%. Now, if you compare that to, say, Vietnam, where it's more like 25.1%, it suggests that India's economy is less reliant on trade with the U.S. and might have a bit more of a cushion.
That sounds pretty positive, at least initially. But I did see a bunch of reports about the Indian stock market taking a pretty big hit after the announcement.
Oh, yeah.
Yeah. Sectors like IT and automobiles seem to be bracing for some serious sell-offs. One report even put the market capitalization loss at something like $180 billion in just a few days. That's massive.
Yeah, that's not small potatoes. And it highlights a really important point. The overall big picture economic vulnerability might be less, like Nomura suggested, but those industries that really depend on the U.S. market, they're naturally going to feel the squeeze.
Right.
They're facing way more uncertainty now. That immediate market reaction, a lot of that is just reflecting this anxiety within those specific sectors. They're worried about their earnings going forward.
Right. So even if the overall economic impact is manageable, there are certain industries that are really going to be facing some headwinds here. Well, let's take a closer look at some of those individual sectors. It seems like some industries might actually come out ahead in all this, which is kind of surprising. Textiles, for example, that seems like one where India might actually benefit.
Yeah, and this is where you see how intertwined global trade really is. With textiles, the interesting thing is the comparison of the tariffs. India's new rate is 26% for textile exports to the U.S., but some of their biggest competitors are looking at way higher numbers. Vietnam's at 46%, Bangladesh at 37%, Cambodia's at 49%, Pakistan 29%, and even China's at 34%. A lot of this comes from existing trade agreements the U.S. has with those other countries, or specific ways they protect their own industries. But these new tariffs, they might actually, in a way, level the playing field for Indian exporters. And the U.S. market is huge for Indian textiles.
Yeah, billions of dollars in exports.
Exactly. So this could really shift things in their favor, make India a more attractive option for U.S. buyers.
So these tariffs on competitors actually create an opportunity for India.
Wow, trade is complicated. What about seafood, specifically shrimp? That's another big export for India.
Well, the agricultural economist Ashok Gulati, he had an interesting take on that. He thinks demand in the U.S. for shrimp might stay pretty stable, even with India's new 26% tariff. He's got two main points. One, India's tariff is still better than a lot of its competitors in that sector. China, Vietnam, Bangladesh, Thailand, India, they're all higher. And two, shrimp, while important, isn't like this massive part of U.S. food spending overall.
That makes sense in terms of the overall demand, but didn't one of the sources mention some concerns about Ecuador, something about their tariff rate being lower?
Right, right. That's a valid point, especially in the short term. Ecuador is closer to the U.S. geographically, so they've got that logistical advantage. Plus, they have an existing trade agreement that keeps their tariff at 10%. But India has really focused on the quality of its shrimp exports, the packaging, the bulk handling, all that stuff.
Yeah. And that should help them stay competitive, as things play out, especially since India exports a ton of shrimp to the U.S. every year. Holding on to that market share is going to be key.
Okay, so let's talk about another big agricultural export, rice. What's the prediction there?
It's expected to slow down in the short term for sure because of the tariff increase from 9% to 26%. But kind of like textiles, the long-term view is that India will likely stay competitive against big rice exporters like Vietnam and Thailand. One analyst even pointed out that this tariff is going to end up hitting American consumers in the wallet. Rice prices will go up. And with how much rice India sends to the U.S., any long-term decline in those exports would be felt.
Got it. Moving on to manufacturing, electronics seems to be a big one to watch. We saw those initial stock market jitters, but some experts are saying India might actually gain a competitive edge here.
Yeah, that's what a lot of industry folks are thinking. The new tariffs might actually make things better for India compared to places like China, Vietnam, Thailand, Indonesia, because they're all getting hit with these big tariff hikes too. This could be a chance for India to grab more of the U.S. electronics market, especially as these global supply chains are being reevaluated. Companies are looking for alternatives.
Interesting. And what about some of those heavier industries like steel and aluminum? What's the impact there?
Here's a curveball. India's steel and aluminum actually got exempted from the additional reciprocal tariffs.
Oh.
But, and this is important, they still have to deal with that baseline 10% tariff that applies to everything. So yeah, they dodged a bullet on those higher reciprocal duties, but it's not like it's business as usual. Plus, there's some worry about steel dumping. Other Asian countries might get squeezed out of the U.S. and EU markets because of these new tariffs.
Makes sense.
So they might try to dump cheaper steel in India. And India is already taking steps to prepare for that. Their trade remedies folks have proposed a safeguard duty to protect their domestic steel industry from getting flooded with cheap imports.
Smart move. Proactive. Okay, so it sounds like we've got a bunch of potential winners and losers emerging here. But what about the overall economic implications? What are the experts saying?
Well, Raghuram Rajan, the former head of the Reserve Bank of India, he called these tariffs a potential self-goal for the U.S.
Oh.
Yeah, his argument is that by driving up costs for U.S. businesses and consumers, the tariffs might actually end up hurting the U.S. economy more than anyone else's. He thinks the overall impact on India might be smaller, partly because these tariffs are hitting a lot of countries, not just them. And he even suggested that India might see a disinflationary effect.
Disinflationary effect.
Yeah, because goods that were meant for export might end up staying in India or getting rerouted to other markets. So that could actually drive prices down within India.
Fascinating. It's like the U.S. shooting themselves in the foot and giving India a discount. So what are the big financial institutions predicting for India's economic growth?
Places like Goldman Sachs, HDFC Bank, and Bank of Baroda, they're all saying there's a slight downside risk to India's GDP growth forecasts because of these tariffs. They're talking about a small reduction, maybe 20 to 30 basis points in their growth projections. But they're also very clear that this is just an initial assessment, and the real impact will depend on a lot of factors, including how India and other countries react.
Right, right. And then there's the whole question of future trade negotiations between the U.S. and India. That could completely change the game.
Totally. A lot of analysts think the US and India will probably sit down and try to work something out. They might be able to hammer out some tariff reductions on certain goods. They've got a history of these kinds of discussions, and both countries want to maintain a healthy economic relationship overall.
Right, absolutely. It sounds like India might need to be proactive on the policy front, too. The State Bank of India, for example, has suggested India beef up its production-linked incentive schemes. For our listeners who aren't familiar with that, these are basically government programs that give financial incentives to boost domestic manufacturing. Why is this seen as so important right now?
Well, because of these tariffs and the way global supply chains are changing, these PLI schemes could become really powerful tools for India. By offering those incentives, India can make itself a much more attractive option for companies that are looking to diversify their supply chains, move away from countries that are facing those higher U.S. tariffs.
Makes sense.
And if India expanded the PLI scheme to cover even more sectors like textiles, engineering goods, gems, and jewelry, they could become even more competitive as an exporter and attract a lot more investment, both domestic and foreign.
So beyond just the PLI schemes, what other options might India be considering? What kind of response are we looking at?
Well, from what we've seen, the Indian government is really looking at all their options. They're developing these models to figure out exactly how these tariff differences will affect specific products. They're talking to local manufacturers, understanding their concerns, but also trying to identify any new opportunities that might come out of this.
That's smart.
They're also seriously thinking about a broader trade and investment agreement with the U.S. where they'd negotiate tariff reductions on a wider range of products. And they're looking at ways to buy more from the U.S. in sectors like defense, aerospace, energy, and technology. They're even sweetening the deal to attract more U.S. investment in areas like semiconductors and renewable energy. The fact that they've been talking with the U.S. since the tariffs were first announced shows they're not just sitting back and waiting, they're trying to make the best of a tricky situation.
So at the end of the day, it's not a simple good news or bad news story for India.
Not at all. The U.S. tariffs are a risk, for sure. They could create some big headaches for certain parts of the Indian economy. But the overall impact seems really complex and depends on the specific sector.
And that lower dependence on U.S. exports compared to some other Asian economies seems to give India a bit of breathing room.
For sure. India's domestic demand is strong, and that helps cushion them against those swings in global trade.
And on top of that, there's a real chance for India to gain some ground in areas where its competitors are now facing those higher tariffs.
Yep.
Textiles especially, and maybe even some parts of the electronics industry. That's a big opportunity.
It is, and it's one that India should absolutely go after. But they also can't ignore the challenges. Industries like automobiles are in for a tough time, and there's always the risk of trade being diverted or other countries dumping cheap goods in India because they can't sell them elsewhere.
A lot to keep an eye on for sure. So given all of this, what should Indian businesses and policymakers be doing now? What are the crucial moves they need to make to deal with these tariffs, but also to take advantage of the way global trade is shifting? And what about those new trade partnerships beyond the U.S.? Which ones become even more important for India in this new world order? Lots to think about there. Thanks for taking this deep dive with us.
Thanks for having me.
And to our listeners, thanks for joining us on the Deep Dive.